Hour of a big trading day. Closing bell with Dylan Radigan.
Well, quite a turn of events on Wall Street. First trading day of the year. Dow Jones Industrial Average off to a record midday. Triple-digit gain gone now. Compliments of the latest FOMC minutes. It's extending its losses as we speak. Oil prices tumbling to $3 on the day. An action-packed first day of the year. Final and most important hour of the trading day does begin right now. Welcome to the closing bell. I am Dylan Radigan. My partner on this program, Maria Bartiromo, off for the day. In the markets right now, a roller coaster on Wall Street. The Dow kicking off the year with a new intraday high. It has erased all of that gain. Compliments of the Fed minutes released less than an hour ago. Concerns about inflation and growth voiced there. Everything firmly in the red. Fed members agreeing unanimously last month that inflation remains the primary risk to the economy. The Fed also saying the recent string of, quote, subdued economic data suggests the downside risks to economic growth in the near term had increased a little and become a bit more broadly based than previously thought. They also expressed concern about the housing slump. More on the market reaction to all of that information, all of which is not entirely new, by the way. But first, here's a look at the major market averages. You can see what the markets did with this. 50 points comes off the Dow after that 100-point advance. NASDAQ and S&P similar in their behavior. Again, optimism out of the gate throughout the morning and into the mid-afternoon. And then those Fed minutes came out and down we went. The NASDAQ now a loser to the tune of 18 at 23.96. S&P 500 down 9 at 14.08. That rally we saw earlier was led by Home Depot, at least in part. Take a look at the stock. It holds on to its gain, ticks back a little bit, still 2.4% after CEO Bob Nardelli resigned. Bear in mind he took with him a $210 million payout package. Not bad money to quit. Nardelli leaves on the back of an investor fury about his pay and the lack of performance in the stock while he took that pay. We here on Closing Bell have been on the phone with Home Depot about those developments, and now on a CNBC exclusive, the company giving us a new response to today's changes. So this is the first word from Home Depot on the Nardelli move. The first question we asked him, how does the management change affect the public perception of the company's strategic direction? Granted, this is an email question here, but first to the markets we go. Reversal is the story of the hour. At the exchange, out in Chicago, down at the NYMEX, 60 degrees forecast for New York this weekend. That's not good for the energy markets. Up at the NASDAQ, along with our special guest, we begin with Melissa Lee, who is our eye on the floor today. Melissa, what's going on?
Hi there, Dylan. What had been a broad-based rally earlier in the session turning into a broad-based decline with a decidedly negative tone. Decliners leading advancers now by a 6-5 margin. Decidedly negative considering that the 80 line had been 2-1 advancers versus decliners earlier in the session. So certainly a turn negative. And here's what happened. After the release of the FOMC minutes, we definitely had a turn lower in the interest rate sensitive stocks. Take a look at the financials. The biggest part of the S&P 500, financials turning lower, being led, of course, by bank stocks. Also, we saw a decline in tech stocks, a big decline considering that for most of the session, areas like semiconductors, PCs, those were very strong. But tech stocks also turning lower, helping to accelerate the declines that we saw in the S&P 500 as well as the NASDAQ. Here's the one part of the market that is holding up nicely, and that is the transports. Up all day, declined just a touch, but still up by just about 1%. We got a couple of upgrades of 2 trucking stocks, J.B. Hunt as well as C.H. Robinson over at Bear Stearns. Ryder reaching a new high in today's session, and airlines performing quite nicely. Of course, transports as a whole being helped by that decline that we saw in crude oil. Here's what had been moving the Dow all session long. Walmart, of course, better than expected December sales numbers, and Walmart continuing its gains as we head into the final hour of trading, although it did pare its gains somewhat. Merck also getting an upgrade over at Bear Stearns to an outperform Bear, boosting estimates for this year, next year, as well as 2009. Merck still trading higher. And take a look at the new highs in the Dows that we are seeing at this hour. Procter & Gamble as well as Verizon. So we do have a lot of stocks moving higher despite that decline in Dow stocks. Also take a look at ENSCO. It is being added to the S&P 500 but being caught up in the wave of selling among the oil stocks. ENSCO, of course, a drilling stock, again being added to the S&P 500 after the close of trading today, but trading lower right now. Dylan, back to you.
All right, let's get fixed income reaction to the Fed minutes. You saw what happened to the stock market. What about the bond and currency markets? Rick Santelli in Chicago, in the belly of the beast. Rick.
Well, Dylan, you know, you have to call it the way you see it. The interest rate complex hardly moved at 2 Eastern. The dollar index moved a little, but not anything major. You know where the big movement was? The big movement was on the stocks. You know that. But listen, let's switch. This is now Tech Corner. If you look at what's going on in Dow and you're a technician, we have a higher high than we did the previous session. As a matter of fact, we have the highest intraday high ever. You're now below Friday the 29th's low. Higher high, lower low. That's called a key reversal. If we close where we're at now, which is well below the 12,463 close from the 29th, that's a key reversal outside day at the all-time high. You can live a lifetime without seeing more than a handful of those. I don't care if stocks go up or down. I have no axe to grind. But if you're a technician, you might be salivating on the opportunities. If this pays off, it's a very bearish pattern. There's still about 45 minutes left. We'll just have to wait and see. Now let's go to the NYMEX. Sharon Epperson.
Well, no time left here. Crude prices fell sharply today and closed at their lowest level since November 20th of last year. We're seeing crude prices closer to $58 than $59, down about $3 almost on the day. And what caused it? Well, it was the warm weather forecast that we got mostly for the Northeast. And of course, the Northeast is the world's largest heating oil market. So we saw heating oil futures lower as well. Gasoline still trading at a discount to heating oil, but lower on the day. And natural gas, usually the most volatile aspect of the complex, was lower as well, but not down as sharply as crude. Taking a look at what happened a year ago this time, the last trading day of the year, of course, for 2006, crude prices were at 61.06, actually only 2 cents higher than where they were at the end of 2005. Well, what happened at the beginning of 2006? At the beginning of 2006, we saw a lot of momentum coming into the market with a lot of fun buying at the start of the year. That did not happen today, and traders on the floor saying that is another large part of why crude prices were lower today. What could move prices in the future, namely possibly tomorrow? Well, we're going to get the weekly inventory report from the Department of Energy at 10:30 a.m. Eastern Time, one day later because of the New Year's holiday. And Platts poll of analysts is looking for crude supplies to be down, gasoline and distillate fuel supplies to be higher. Crude stocks, the wild card to watch, because the Department of Energy has been restating some of those forecasts over the last couple of weeks. Now over to Rebecca Jarvis, who's standing by at the NASDAQ. Rebecca.
Thanks, Sharon. Well, the NASDAQ over here down about 0.5% off of the session lows. And we've got some interesting things going on. Sirius Satellite Radio and XM Satellite Radio, last year's biggest losers, now today's biggest winners. XM up 5.1%. Sirius up 5% and XM Satellite up 4.1%. Sirius Satellite saying they added 82% more subscribers last year. We also have a handful of upgrades here today. If you take a look, T. Rowe Price upgraded by both UBS and Wachovia. It's up 3.5%. PacSun up 3.3%, upgraded by Piper Jaffray. Baidu.com up a whopping 6.2%. That is in light of an upgrade from, to Sector Perform. And our Urban Outfitters also upgraded today, and it's up 1.8%. One downgrade to draw your attention to, it's Amazon, downgraded by Citigroup. It is now down 2.3%. And one last thing to draw your attention to for the day, it's Cytokinetics. It's up 10.3%. Earlier today, we learned that they will be partnering with Amgen on a heart failure drug. Now I'm going to go back to the studio with Dylan. Back to you, Dylan.
All right, Rebecca, thank you very much. Dow Jones Industrial Average losing momentum today following minutes from that Fed meeting. Again, concerns being voiced there about inflation. For more on today's market action and an outlook for the rest of this year, we're joined by Conrad Gann, President, Chief Operating Officer at Trim Tabs Investment Research, and Richard Cripps, Managing Director and Portfolio Strategy. Excuse me, it's stifled. Nicholas and Richard, I'll begin with you. Your thoughts on the reversal for the day.
Dylan, we've had 7 consecutive months of gains in the S&P 500. That's the longest consecutive streak we've had in a decade. You couple that with widespread optimism as we entered in this year, this market was quite ripe for a pullback, and I think that's what we're saying.
Are we over assigning, Conrad, the short-term nature of the reversal to these Fed minutes and inflation concerns? When you read the comments, it doesn't strike me as anything exceptionally new, more a reiteration of the sorts of concerns we've known that the Fed has.
I would agree with that, Dylan. I think investors should focus on the longer-term trends in the economy, which continue to be very favorable. At Trim Tabs, we focus on real-time economic indicators, and one of our favorites is following wage and salary tax receipts by the U.S. Treasury, which we can measure with a 100% sample on a daily basis. And at that level, in terms of tracking the consumer at that level, we're seeing acceleration from the third quarter to the fourth, from a 5% year-over-year growth rate to an 8.3% year-over-year growth rate in the fourth quarter. So we think that we're entering 2007 with a very favorable economy. I wouldn't read too much into
Well, here's the thing. I mean, we could talk about the economy all day, and it may be the most perfect economy in the history of the world. It doesn't mean that the price is right. In other words, this sort of price volatility suggests that there's maybe an emerging debate early this year, not so much about the economy, although I'm sure that's not going anywhere, but also about whether we've overpriced it.
Well, from a price perspective, you know, we focus on traditional liquidity at TrimTabs, and the supply of equity stock outstanding has been shrinking for 24 months on a consecutive basis. We think these are the best of times from a liquidity perspective, and we anticipate double-digit returns in the first half of this year.
What do you say, Conrad? Forget the economy for a minute, to the extent to which we can. How is the price that we're assigning to a moderately growing economy look to you today?
Well, again, it
actually, Richard, I'm sorry. Actually, Richard, go ahead.
Yeah, good point, Dylan. I think that's the point. We have gone a very long time without even so much as a 10% correction in the S&P 500. In fact,
let's cut to the chase. Our price is too high. I don't care how good the economy is.
I'm going to say that prices have not had any chance to rationalize, if you will, some of the other issues that are out in the market. So bottom line is, I think that the stock prices have momentum to them. They're going to go higher, but I think that you have to recognize that markets do have corrections, and we haven't had one in a very long time.
Really quickly, Richard, the other thought that occurs to me is, how can you tell me that the Fed is more or less a foregone conclusion? Not that you're saying this, but that the market is saying, listen, sometime this year they cut rates. We get a Fed minute that talks about inflation and growth, and a 100-point gain turns into a 50-point loss. May mean nothing in the big scheme of things, but it sure does give you some psychological insight.
Well, I think it also says that a lot of investors are anticipating that the Fed will be reducing interest rates, and you're going to have to push out that story further into 2007.
All right, gentlemen, a pleasure to get you both. Thank you very much. Less than 50 minutes left in the first trading day of the year. Dow Jones Industrial Average, a loser. Reversing on those Fed minutes, NASDAQ, same story as CEO Bob Nardelli bids goodbye to Home Depot. Is the door for a buyout now open, and does this put other highly compensated executives whose stock prices haven't moved in years straight into the crosshairs? We'll find out what the street is saying. And speaking of buzz, there's a lot of that going around about a possible deal in the media industry. We'll tell you who the players are on that one this afternoon.
I'm Jane Wells in Universal City, where 3,000 miles away, advertisers in Times Square are somehow able to reach me, and it's not costing them a dime. How does that work? Find out later on the Closing Bell. But
first, the most active names at the New York Stock Exchange, led by the Ford Motor Company. There's Home Depot in the two-hole. EMC, GE, and Alcatel round out the top five.
You're watching Closing Bell on CNBC. First in business worldwide. The bond